Hello traders and welcome to today's video. Happy New Year. It is the 1st of January 2024. I hope you had a fantastic Christmas. I hope you had a great holiday time and ready to get back to the charts. Hopefully you're not feeling too hungover this morning. I was a very good boy last night. Feeling fresh today. Sober New Year's. A nice New Year's, just a chilled one, and ready to start this year fresh, feeling good, fully motivated, and ready to smash this bull run that we're currently in. So, let's get into a little bit of price action. And I want to cover a little bit of macro stuff today, which is something that I don't do all that often. I am a trader first and foremost. I will trade it whichever direction that this market goes. However, as the title of this video suggests, I do think we have reason to be very positive about the next 12 months on Bitcoin in particular. And of course, if Bitcoin's bullish, the whole crypto market is going to be bullish. And the likelihood is that we're going to see stocks and other assets looking pretty good over the next 12 months as well. So let's start off here with, I'll do some charts. And then I'll do a little bit of the on-chain stuff. And of course, I will cover the ETF. So starting off here with the chart, I'm going to go into the yearly. So this is the Bitcoin yearly chart. We had our yearly close yesterday, okay? A move of 170% up on the year after the previous year got that drop of 67.85%. Now, what we have seen throughout the past couple of cycles here, since 2013, when Bitcoin had really kind of matured as a tradable asset. Before then, I wouldn't really say it was particularly a tradable asset so much. This is when the exchanges really started to get on board, was around that 2013 time. And since then we've had these 1, 2, 3, and now potentially going into our 4th market cycle here. So what we've seen is the first major all-time high that we had in 2013. So I've labeled this as a 1. Second year, you have the correction, okay, the correction of 71%. Third year, okay, you get that bit of a move back down again. But again, third year being the consolidation. Fourth year being more consolidation, pushing up towards the highs. And then you make a new top on that new start of the next cycle. So the first all-time high, bearish 2, bullish 3, 4, and then a blow off top. And then 1, bearish 2, bullish 3, 4, blow off top. Consolidation on the 2. We've just done our 3 here. So are we looking at a bullish 3, 4, and then followed by that 2025 potential top to be put in next year? So this basically on this chart showing us that we potentially have another year and a bit of upside to come here if we are going to see this kind of continuation where we have a bullish 4th year after the top, and then we go into that, like it makes the high wherever that may be on that new 1 or 5 or whatever it is that you want to call it. So does that make sense? Something that we've got to be aware of, and something that I am looking at on the charts here is just the general market cycles that we're playing, these 4-year cycles playing out, and now we're going into what historically has always been a very, very good year for Bitcoin. If we go down here onto the daily, then again, some reasons to, I guess, remain bullish long term. We're not even at the 618 here. So, the previous cycle, okay, we had this move up out of the bear market that came into that golden pocket 618 level, hit that previous year open, and then we had that consolidation that came down and back tested this 200 weekly EMA here. On this occasion, we're still consolidating, okay, just below that previous, well, not previous year open anymore, but this being the yearly open from 2021. And there's still a bit more upside that this has before it gets to similar targets that we had on the previous bull market. And also, we're in this uptrend. Okay, things are looking very good. I'm not saying that we're not going to correct and come back down to test those 30Ks again, but overall, I think the market looking very healthy. We're about to see a golden cross here on the weekly, which will be the first time it's ever happened, interestingly enough. This is on the SMAs rather than the EMAs. The EMAs, it's already happened. So if we do just change this onto here, we had, you had that very like minor little like cross down and then back up again back early last year here. So yeah, weekly still looking pretty healthy. We still have those targets of 46,200 to 48,200, where we could then be looking at this corrective move. Now, the higher this goes, the higher the target for consolidation is going to be as well. So if we do start to correct here, then we could see those moves down back in towards that like low 30K area. However, I do believe if we continue to push higher and we come up towards those high 40Ks, then we're looking at those high 30s with these EMAs potentially acting as support for price where if and when we do get a corrective move here. Now, yeah, just have a look quickly on the 4 hour so we can see the EMAs again being quite useful here. Okay, so this is the 200 moving average, supporting price quite well, and we're just consolidating between that 200 and that 50 right now. We were expecting consolidation over the Christmas period. We were looking at this, basically this whole range here. We had those two high volume nodes. All right, we had the high volume node at 42K and the high volume node at 43,800. And we were expecting price just to kind of fill out this area in the middle and turn what was a B profile into more of a D profile before we look for expansion up or a move down, a corrective move down here. So we're still consolidating. Obviously, a few more days to go until a potential ETF rejection or approval here. So I do think that we can continue just to see this kind of thing play out for the next few days. Also, if we're looking here, like anchored VWAP, we're still like riding along those outer bands there on the anchored VWAP, but this is all looking pretty healthy overall. So yeah, price right now, consolidation before. For me, I do think that we still could see continuation higher. I do think that would give us a local top that probably pulls us back for a few months or something. We're going to get the whole narrative of, yeah, okay, the technicals will play out. Whatever happens with the ETF is going to play out. And then we shall see what happens after that. Now, talking about the ETF, okay, these are the dates for the ETF applications. All right, so we only have ARK and 21 shares ETFs to be basically decided by the 10th of this month. Now, this is where I think that there could be a curveball thrown in. Because whilst we do have further deadlines, we've got these deadlines here for iShares, the BlackRock ETF, which is the big one, Bitwise, Valkyrie, Fidelity, all of these, VanEck, WisdomTree, Invesco, and Galaxy, blah, blah, blah. We've got those further deadlines coming up. Again, within the next couple of weeks here. The actual deadline for those is not until March. So I've thought for a while that BlackRock would be the first one. BlackRock basically being the biggest of the lot, being the most closely tied to the US government and the ones that the powers that be will want to basically be the monopoly or the market leader within the ETF. So would it make sense to approve ARK beforehand? Maybe not. So yeah, a potential curveball could be thrown in where if we do see a rejection, maybe there are certain considerations that they have to put in and they will reapply, and then there'll be a deadline basically to be met once this BlackRock one gets potentially approved in March. Now, overall, the ETF, it's not going to be a sell the news. When it does happen, in my opinion, I think that is highly unlikely. Okay, we're getting so the entire Bitcoin market cap right now, if we're looking at, well, actually, I'll show you this in a minute. No, I'll show you it now. But I've been doing a little bit of research today. The entire Bitcoin market cap right now for the ETPs, which is just general kind of the assets that are traded currently, standing around that 50 billion of assets under management. Now, if there is an ETF approval, that is going to basically more than double the potential market cap of this. That will give an extra 70 billion assets under management that will be available for the market. That is pretty bullish. This is a report done by, an article by Cointelegraph, but there's a report from BitMEX Research and also from Bitwise that I think it was Bitwise or something along those lines, that calculated the potential market caps for all of this. Now, if we are looking at we'll go over. I want to just go over gold and just show you what happened when the gold ETF was released, and this was in November 2004. So once again, you had this gold doing a very similar thing to what Bitcoin did, like a big blow off top, had that bubble. You had a consolidation. Obviously, markets a lot slower back then in the 80s and 90s. All right, we can trade these on a computer with leverage and all of that sort of stuff now. So naturally, markets move a lot quicker than they did back then. And this was, I mean, does this not look like the year that we've just had on Bitcoin, with just this continuous move up? And then the gold ETF got released around November 2004. And then what happened subsequent to that? You had that little bit of sideways, a small correction, people being like, oh, maybe this isn't the most bullish thing in the world. But after that happened, you had a 367% move to the upside and another massive bubble on gold. And it's just been continuing to push ever since. So if we can draw comparisons here with the gold chart and the Bitcoin chart, there are certain similarities. If you even look at the structure of where this is, taking out some previous highs, like where Bitcoin is right now, looking kind of, oh my God, I'm drawing all over this. There we go. Looking kind of similar, right, with the chart overall. And what happened afterwards is kind of self-explanatory, right? So that is the ETF stuff. I do not believe it's going to be a sell the news and it's going to bring in a big bear market. I don't believe in the whole recession scenario that a lot of the bears are talking about. I do think that we are heading for a very bullish year, but that doesn't mean that we're not going to have 20, 30, 40% corrections within that, because that's very normal to happen within a bull market. So when we do get that, that will be when we have those big buying opportunities that it is just really important not to pass up. So for me, I think we do continue a little bit higher as we go into these ETF stuff, the ETF news, and then we start to cool down maybe Q2, and then Q3, Q4. Once again, we go off and start going crazy again, looking for those new highs to be put in on the Bitcoin chart. So that's just my own opinion on how things are looking really overall within the market. Now, if we go back over here onto the old internet, I want to show a few other metrics. So this is a really useful website. It's the Into the Cryptoverse website. So he's a really, really good thing for kind of on-chain analysis and just looking at the general market cycles overall. So if I zoom in on this slightly, this is the BTC market cycle bottom return on investment. And if we zoom in on like this section here, these are the last 3 market cycles. I don't know why this is being a little bit flickery on my screen. Apologies if it is annoying. But where Bitcoin is right now, sat at that 2.83 ROI since the bear market bottom. This purple line basically being our current market cycle, and you can see it's like following really, really well. And actually, when you do like reset zoom and you look at what happened exactly a year on from the bear market lows on each of the last 3 market cycles. Now, the last 3 market cycles being these. So this market cycle 1, market cycle 2, this one, and now we're going into the next one. All right. These market cycles all lining up really, really closely. So where we were a year after, so if you're looking at 300 to 400 days, over here, go into the middle of that. All of this was around the same. Okay, you can see around about that 2.2, 2.3, 2.4 ROI from the bottom. And now we're continuing to just move along this line here. So there's a long way to go from what this metric is telling us. There's a long way to go. You can see the last two market cycles ended at the same time also. So that was roughly, well, almost 1,100 days since the bear market lows. There was an all-time high that got put in. Okay, so when we had that all-time high last cycle and the cycle before, around about that 1,100 days after the lows that were put in. So judging by that, we've got a good year or two left of bullish price action potentially ahead of us. Something else to look at is this is the ROI after the halving. So we can see the previous two halving cycles that we've had. So the first one getting that return on investment of 30x return, and last time having that 7x return. And we do have the halving to be, well, that is coming up around about April, May of this year, I believe. So yeah, there is a halving cycle as well as the ETF stuff coming up this year. Historical risk levels, we can see we're still fairly low on the risk. This certainly isn't looking like a bubble or anything right now. In fact, we are looking like it was on those previous two cycles. Okay, we had that move up that came into that golden pocket on the previous cycle. Once again, I can show you this back here. Okay, so this on the chart here coinciding with similar kind of risk levels, that 0.6 risk level, where we had a corrective move that came afterwards. All right, had that corrective move that came afterwards. COVID in the middle of that, which is what I think is making people a little bit more bearish, because people who only played the last cycle still expecting maybe a black swan event, but that is a black swan event. Okay, without that, then this would have just been a typical like 30% correction before continuation higher. And we're looking at something very similar once again here. Now, also useful metrics that are on this website is just general sentiment. Okay, so we can see Twitter. These are the big, the people that, well, whatever's on here. This is the influencers, the amount of followers, the amount of new followers that these big crypto influencers are getting, still incredibly low in comparison to where we were within the last cycle. And this really only being, you can only really compare this to where we were within that corrective phase of the market during the previous cycle. And it's a very, very similar situation on YouTube. Okay, you can see since those all-time highs that were put in, the amount of YouTube views, crypto related YouTube views and YouTube subscribers have just been going down ever since. So we are certainly not anywhere close to seeing a bubble right now. So yeah, remaining pretty bullish on Bitcoin. Hopefully, if you like this video and if you are watching this for the first time, if you subscribe, maybe you'll help these views start to go up. And if these views start to go up, and if you follow me on Twitter and do all of those kind of things, yeah, maybe we start to see some of these metrics improve. And then that means price go up. And then that means there are people to sell to. And then that makes us very happy. But anyway, yes, that is just about everything I have to say. Just going back over the normal stuff. Okay, we're still bearish, bullish CVD. Okay, through this entire consolidation, there's been a lot of profit taking, a lot of selling going on. Prices remaining relatively stable, and I do think that that is more likely to give us a move to the upside. We did have that nice flush just as New Year opened yesterday, and yeah, that was pretty cool. Open interest starting to rise again, natural. Okay, people are coming back to the charts today. People are starting to get themselves positioned after the holidays very slowly, starting to get repositioned after the holidays. But yeah, open interest starting to rise could lead to a move. And it does seem that a lot of these people are looking at short positions, because we are starting to see quite a big increase in well, possible liquidations above us around about that above 43k. So if we are to see a move up, there is certainly fuel that can push this a little bit higher here. Looking at general like exchange, CVD, and open interest, again, it's a similar situation. Okay, we are seeing slightly more shorts opening at what you would have to consider to be support at this time. So yeah, that leads me to believe that maybe a couple more days, let this chart just chill out a little bit. We do have ETF coming. Is that going to be an approve or deny event? If it is a deny event, then honestly, I think we could still do this and just shake everyone out, because the market structure is going to be the king. And then it is March that we're really looking at, in my opinion. Is that March, April, May time. I do believe that we see a new high for the year and we correct after that. So even if we reject, I think that could see a flush and then a move higher, and then we start to correct. And then March, April, May is the time where we're looking at really good buying opportunities, I would say, within the market. I do think we see some fear within this first quarter, and yeah, that's going to be very, very nice when there is some fear. Because we kind of need it. We kind of need this cool down in the market to give us just a chance to reallocate positions and do all of that kind of stuff. So this has been a long video. I hope you appreciate it. Please do comment. If you have watched the whole video, comment, let me know your thoughts below. I will see you in the next one. Have a fantastic first day of the year. And yeah, I will see you all again very soon. Cheers. Bye-bye.